Oh, now what's happening? What's happening? What's happening, y'all? I had to go all the way back in the. I had to go all the way back into the vault and pull out this one right here. See, most of y'all think that this was Two Live Crew. No, it goes back before Two Live Crew. It goes way back before Two Live Crew. This is from that era where everybody was sampling everybody's music. We thought that it was something that they were coming up with. This right here, ladies and gentlemen, is called Firecracker by Mass Production. But hey, that's not what I'm going to talk to you about today. But I am talking to you today about mass producing money. And it's a firecracker, ladies and gentlemen. It is going to be a firecracker. So let's get this thing started. I just like the way this beat right. Cracker. No simple music like that, but it was a hit. Alright, let's pass this off, y'all. Mass Production Firecracker. Ha! But I hope that I do realize it's the holidays, and probably a lot of people are out shopping, spending that money, spending that cash. And we just got past the gathering that was on Thursday. In a lot of places in the urban community or in Black America, we don't call it Thanksgiving because a lot of us who are conscious, we all know that was a massacre. Do your research. Did you miss me? Hey, let's get this thing popping. But if you was at the gathering this past Thursday, I hope that your spirit was filled with all kinds of fellowship from family and friends. And I hope that the food that you consumed at the gathering was a nourishment to your bodies, that you can continue to go out and live life on your own terms. Live your dreams. It is great. Fire your boss. All right. So right after that, ladies and gentlemen, today's topic is B.Y.O.B. And it's not what you think. If you can hear me well, put your one in the comment. Let me know that you can hear me because this one's going to be a doozy. I want you to get your pen and your paper because I am going to be plugging you guys in with some serious information today that is going to be paramount. I like that word. I like using these big words everywhere. It's going to be paramount to your success. And the reason being, grab your pen and paper because I want you to write all of this down, ladies and gentlemen, because today we're going to be talking about B.Y.O.B. And it's not bring your own bottle. This is a term that's been put out here, has been put out in the universe for the past 3 years that I know of that a lot of people have been talking about. And it is be your own bank. Now, a lot of times, a lot of us didn't know exactly what that meant. A lot of people didn't know what that about being your own bank. And it kind of sounded a little crazy and kooky because it was like, wait a minute, how am I going to be my own bank when I need to go to a bank and get a loan? I need to go to a bank and buy this car or this house or whatever the case may be. I can't. I need to go somewhere and have these direct deposit checks from my job going to. But ladies and gentlemen, that term it's been around actually for a long time. But we have just now started. It's just now in the past 2 years being popular. And so while everybody was out getting ready to cook up a whole bunch of food and be eating leftovers over the next 3 days, I have been studying, ladies and gentlemen, for you. Ooh, all the way from the lawyer's office, from the attorney's office, to doing a lot of research about this topic today, and it's about B.Y.O.B. Be Your Own Bank, and how you can establish your own bank, and how you can be in control of up to $1 million. Oh, don't that just sounds delicious? And I know some of y'all thinking, looking at me like, man, Robert Cheese was fed all the way off his cracker. He is gone. But now, I want to tell you about the game that has been withheld from us until now. And if you but listen, you will get this full game about being your own bank, B.Y.O.B. So let's get right off into it. All right, so it started Tuesday. Tuesday, I had a meeting with my attorney. And that Tuesday, I was setting up, prior to this last week, I just opened up two insurance policies both for my daughters, who are 16 and 14. Now, keep that in mind. 16 and 14, I just opened up two insurance policies. Now, in that insurance policy, now here's the game. I'm going to be throwing out terms for you that we have heard repeatedly all over social media. In these terms, a lot of people haven't been given any type of definition and insight on these terms. But last week, I opened up insurance policy for both my daughters, or both of my daughters. Now, those two insurance policies are a million. I'm going to give you some now. I know I am officially worth more money dead than I am alive. But now let me show you how to protect that so nobody kooky can try to knock you off too early, even if it's a spouse or your children, and try to get that money first. Now, this game all started way back when Waka Flocka, the rapper Waka Flocka, came on and did an interview, and he was talking about, oh, I'm just going to finance my own music career. He said, if I had a new then what I know now, I'll just go open up $1 million insurance policy and I'll borrow against the insurance policy. Aha! That influx, well, that statement caused a lot of people to start doing some research. I wanted to make sure that when I plug you in with this information, it's going to be the exact correct information that you will need. That is true, ladies and gentlemen. You can open up an insurance policy and you can borrow against it. But what type of insurance policy? Completely 86 and scratch term. Do not open up a term insurance policy. Reason being, ladies and gentlemen, yes, term insurance does, and they will pay. They have paid. We already been established. But it is for a term. And term policies don't pay out that. This is why a lot of your jobs, they offer you term life insurance policy. Just enough to stick you in the dirt. They'll come with the little $10,000 policy, the 25,000, 50,000. I've seen some that go up to 125,000. And it's just enough to put you in the dirt, cover your medical expenses, because even though you're dead, that's still a debt. You might owe some on the house, you might owe some on the car. So those small term policies are going to pay that little small amount of debt. Welcome to Plugged In. But now, so you want an 86 term policy. You want to start looking into a whole life or a universal policy. Now, this is the game of how you can create and be your own bank. And this is in direct connection to what the rapper Waka Flocka was talking about and how it can be done. Now, there is no law, ladies and gentlemen, that's in the history of the United States of America that says you can only put so much money as a life insurance policy on yourself. There is no law. If you want to put a $200 million life insurance policy on yourself, you can. You can total that amount to be whatever you want it to be. That's a conversation between you and your agent, which I would recommend that you go with a nationally known company. And what I'm doing, I'm giving you also the game that has been kept or not talked about so much because wealthy people have been playing this game for a long time. So I went last week, created those two insurance policies. I now work officially more dead than I have. I have $2 million when I die. Here's the game. Here's more game. It don't take that much money to put you in the dirt. Now, this is where you want to grab your pen and paper. You want to create a universal policy. Now, you can also do the same thing with a whole life policy. Some of you may have or may be a little familiar with the insurance game, but some of us only put insurance back to what we can afford. Now, there's an old saying that says you can buy what you want. If you want it to happen, you'll find a way to make it, right? So now we worked that out, got that all set up, but now here's the game. That money will not be paid out to a single member beneficiary. Hence, we're going into when a lot of people hear the term generational wealth. When people start talking about generational wealth, they really don't understand what generational wealth is. That means for generations down the line, even after I'm dead and gone, my lineage will still be rich. But how do we establish that? The average American, ladies and gentlemen, is not wealthy. The average American is not even rich. The average American is middle class, and that's lower middle class. So we just come. We make enough money to pay our bills and just survive. We'll make it through life. We're gonna die safely, and we'll have enough money left over to spend us in the dirt. And to have a whole bunch of people crying and snotting and boohooing over us, looking down at us. Now, that's on you and how you choose to go. But instead of having that insurance policy turned over to each one of my daughters, I only got two, instead of putting that kind of money in their hands, this is what you want to do, ladies and gentlemen. You want to go and talk to you an attorney. And from that attorney's meeting, you want to set up what is called a trust fund. We've all heard of trust fund, but how do you set that up? Now you know. You have to go to you an attorney that deals in trust funds, not just a regular old general practitioner. And the reason why, ladies and gentlemen, you want to find one that specializes in that because he's going to tell you how to protect that money. It's kind of like you don't go to a general practitioner physician. You don't go to a doc in the box and for a cancer diagnosis. Bad as that means, that might be a bad. You want to go to a specialist that deals in that particular field. That's the same way going to a general practitioner if you got a problem with your eyes. You want to go to an ophthalmologist, or if you want to go to an eye, ear, throat, nose doctor, someone who specializes. So to create and set up your trust fund, you want to go to a lawyer that specializes in trust funds with family, estates, and all of that stuff. They have a specific law practice just for that. He's not going to be that lawyer that's going to be arguing your criminal case. He's not going to be. He doesn't do corporate law. He doesn't do civil law. He only did or litigations and all that kind of stuff. He specifically deals with trust. So you set your insurance policies up, whatever dollar amount that you want to establish, whatever dollar amount you want to start your legacy to have. You got to keep in mind now, never, well, I'm going to say never. I can't tell you what to do. I'm just going to give you information on how what's best. Because this is how you protect that generational wealth. Don't wield all of that money to a person. I'm gonna tell you why, ladies and gentlemen, money changes. Money will change people. Money has changed people, and money can change people. Look at all of your lottery winners. You have to be trained mentally, and I was just sharing this with my mother today. You have to be trained mentally and trained financially in order to be able to handle all of that money at once. The mass majority are broke within 6 months of lottery winning. So even today's time, ladies and gentlemen, $1 million is not the same as $1 million of yesteryear. Now it's still a lot of money to the average person who's never had it before. But to go through that, if you dump all of that money into somebody's hands at one time, they done already started spending that money before they even got the check. They done upgraded the car, the house, the clothes. They done already started buying Louis Vuitton. They ain't buying knockoffs no more. They want to prove to everybody that they got the real deal now. Did you know, and I'm going to tell you how money changes people when you're not trained for it. There's an interesting study that's out. It's not even a study anymore. It's fact, actual fact. And they chrono they keep track of. I was trying to use that big word, chronologically, whatever, categorize it, but it didn't come out right. But they keep track of how much money black people have spending power. Now they keep up with every ethnic group, but the study, and you can Google this if you want to fact check it. $1.8 trillion last year, Black America spent 1.8 trillion with a T. Black America bought more Mercedes Benz than any other ethnic group in the entire country. Out of that same number, there was a decrease on black wealth individually. Mm. Now, how can you have less? We don't manage or own anything, and I'm taking you to a point because I'm trying to show you something about you can afford what you want to afford, and you can create wealth out of the money that you already have. And it's not a black and white thing. Definitely not a black and white thing. It's a mental thing on financially being trained and how we handle all of that money. Now, myself being of the black persuasion, I am melanated skinned. So, yes, it's a special podcast for melanated people because we have the money, we have the means, we just haven't had the education. So, here it is. Let's back it up. Insurance policy, whole life or universal. Woo! Somebody put some claps. Whole life or universal. I am particularly to the universal. Payout is a little better. They're about the same, but one is just a little bit more. Now, once you create those accounts, then you'll go, once you create those policies, and you're paying on those policies. Now, to be your own bank part of it is, and this is the part that got a lot of people confused. They think that you can just put $1 million insurance policy, then you can turn around and just borrow against it next week. No, that is not fact. That is not fact. You have to pay into that policy. Now, the money that you pay into that policy, that's what you're eligible to receive when you need it. Now, what most wealthy people do, the circles that I have talked to, oh, my hand is, ooh, thank you. The circles that I have talked to, when they find out that the wife is pregnant, they immediately open up an insurance policy into the child's the unborn child. He ain't even born yet. Conceived, but not born yet. They automatically open up an insurance. Now, They pay on that insurance policy all the way up until the year 16. We already know that this is a big event. Sweet 16 for girls, 16-year birthday for boys. This is the time of your first time of major responsibility, and you want to buy them a car. I used to wonder how all of those kids at school, what we call the preppy kids, I used to always wonder how they were buying brand new cars, and I rode in a bus because their parents had already tapped into the insurance game of being your own thing. So now, all of that money over 16 years that they paid into that policy, they can go borrow that money from their policy, not a bank, ladies and gentlemen, not a bank. No, 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 no. No type of credit union, no type of check writing places, no type of nothing. They ain't got to go to the check in the box uh, lending trees and money loaning companies. They ain't got to go to none of that stuff. They go to the insurance company, borrow the money from the insurance company, and then go buy whatever car they child want off the parking lot, cash. Or now, if you really think about it, pay the majority. If you got a $30,000 car, go pull 25 off, and then make the child get a job to teach them responsibilities of teaching them how to make that payment on the last remaining 5 grand. This is how we need to be mentally trained and financially trained again to deal with that kind of amount of money. But you don't put all of that money in the hands of a 16-year-old. They will completely go retarded. They'll forget about the car. They're going to go splurge. And the same thing happens to the majority of us adults. Now, that money that you pulled off of that you borrowed, they got 2 more years before they graduated. Mom and daddy put that money back on a payment plan because here's the thing that I found out in this research and study. Insurance policies, the federal government cannot tax your insurance policy. That money is sitting free and clear. You don't need to create an offshore bank account. You don't need to launder or wash money or to hide money. What you do, ladies and gentlemen, you buy an insurance policy and you put your money in the insurance. Oh, the game is sweet. The game is so sweet. We've all heard about people putting money in the Cayman Islands and Switzerland and all of that stuff sounds good. Wealthy folks hide money over here so they don't have to be taxed on it. But they do the whole time. See, it's called misdirection. Not misinformation, misdirection. Because the average person that's middle class and lower, we can't even see the Cayman Islands. Part of it don't even know what that is. You know, say, I know. Switzerland, forget about it. They ain't gonna know. So we resulted in did what grandma did. Hid our money in the Bible or the mattress. We know where them at. Just being for real about it. Putting the money in the shoebox. The bank, when you start learning a little bit of stuff, you start learning that the bank don't even hold your money. Ooh, who didn't know that? Your money is a number at the bank. If you got a large sum of money, let's just say 25, 30,000 dollars in the bank. You know, you say, hey, look, I want to go close my account. You know what they're gonna make you do? We'll have a cashier's check issue for you after 12 o'clock. Because your money is not in the bank. Now, and to go and think that you're gonna pull out cash. Oh no, 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 no. Now that's a way different than closing your little $200-300 account. They're gonna count that out. But when you got some major cheese, when you got the cheese and the bread in there, they gonna give you a cashier's check. Real talk. They'll give you your money. And then when you go and take that somewhere, I can't cash this nowhere. Who's gonna cash all of this? I want the cash. Well, you would have to come back in 3 days because now they have to order the money to give you your money. Real talk. Y'all better learn how this game is played now. I'm plugging y'all in with some real stuff. But anyway, your insurance policy, you set that up, and then on the in the event or the time that we will all leave, because it's the eventual coming for us all. None of us are going to be on this planet forever. So there is an eventual coming for all of us. Why not get prepared? Is it not your job as a parent to leave your children in a better position at life than what we had it or when you had it? Yes, it is. Now, is all of our children gonna be good? No. Some of them gonna mess up, some of them gonna be downright terrible. But the opportunity is there. I know enough people to where just because they're wealthy don't mean they're gonna have good offspring. Some of them are waiting for their folks to die so they can sell off everything. Some of them are already drug addicts, alcoholics, whatever have you. So money doesn't mean that everybody gonna turn out right. Again, this is why you have to train. You know, the book of the Bible says, raise them up in the way that they should go. That don't mean that everybody gonna turn out right. I mean, trust me, I got some family members as long as two left shoes. And I know the parents that they had. They're my folks. But everybody, and that's not a crack shot on nobody. We all got black sheep. We all got crackheads. We all got drug addicts. We all got alcoholics. We got all these type of people in our family. Some of us are on it now. That is still family. Anyway, let's get to it. To put all of that kind of money into the individual thing without proper guidance, teaching, and education is asking. Now, the reason being why you want to establish and set up that trust is because the trust fund, through the attorney, you have the power to leave specific instructions on how that money is to be dispersed. Through the trust. Now, the trust fund, now here's another term that you want to look at. You want the trust fund to be governed and ruled by a legacy foundation. You can call it a term whatever you want to. And different places, different lawyers may know different terminology depending on the different states that you in. But you want to have the legacy foundation or the foundation as the governing body over the trust fund. And now you want to appoint a trustee. Now, me being the person that I am, I already know how money can change people. Even the people, the law firm, because I watched enough American Greed to know that you got a free $2 million that's sitting in access to a lawyer or a lawyer's office. Let me give you a story. Steve Harvey, and I posted this video in my news thread, so you guys can go back and watch it in my news. Steve Harvey, when he had the show Me and the Boys, he was also hosting the Apollo Theater. Steve Harvey had an account that was embezzling money. He stressed it. And this guy was taking the IRS checks that he owed the IRS. He was taking that money and putting it in his own pocket to the tune of, I think it was 38 million, might have been more than 38 million. But Steve Harvey wound up owing the IRS 38 million plus. He didn't even This is what happens when we get caught up into the hoopla and the whirlwind of money. We don't pay attention to the small things. Think about that. So Steve Harvey didn't even know until his accountant died. And then the new accountant was found the error in discrepancy and found all of the checks. And then he had to write one big check to the IRS. So this is why everything is set up in checks and balances. So even though you have an attorney there, also have you an outside third party accountant that can come in at any time and do an audit on the law firm and the CPA that you have hired. They can do that unscheduled, unsolicited, anytime. Now, you can also leave specific instructions in your trust fund that, however often you can hire an investigator to make sure that your trustees are doing everything that they're supposed to do in order to keep getting funded money that you established. Now, automatically, off the top, in the day of my demise, and I'm just sharing personal stories with you guys, so you can set this up however you want to, but you know that the information is there. In the day of my demise, 100,000 off the top automatically pulls out and creates my two daughters another $1 million policy. So now their policy is set up at $1 million, and they already have 100,000 paid into their $1 million policy. So what did I just do? I just gave them automatic access to it. Now they have access to it, but they can't touch it unless the trustee, whoever you set, or whoever the person that I established, approves that they need that money. If they want to buy a brand new car, go buy a brand new car. But don't let the board or the trustee board write them a straight out check for $30,000. No, not to the individual person. You take the papers from the car dealership, take that to the trustee, and say, hey, this is the car that I want, and this is how much it is. The trustee takes the money to the trust fund, to the foundation, and the foundation cuts the check to the dealership. They don't need the money, they just want the car. This is how you keep your generational wealth from being depleted in one generation. It has to be done this way. Because why? Money changes. Money changes. My trustee asked me, well, what if they don't want to? What if they don't want to? Because I left instructions. Either you got to graduate college, and I know college isn't for everybody. I didn't graduate college. I know everybody. Some people ain't gonna finish. Some people not gonna think that it's all what it's gonna be to be, and that's fine. The top 5 billionaires didn't finish college, and they're the top 5 wealthiest people in the world. So that's not a bad trade, not a bad swap out. But if they don't finish college, they have to run one of these companies because my businesses have already been established. They already got money coming in. They already have a brand and a name and a reputation and all of this stuff. Already got clients. And my daughters know that working is an option for them. But if you don't want to do this, what that is, then you got to pave your own way. You're not going to live on your trust. I don't take care of wrong. Now, there's some other things that I got in place that some people might view a little bit hard, but I don't want them blowing through their money. I don't want them to wound up uh, getting with. I know they're going to be in relationships and all that kind of stuff. I don't want them to get with no little knotty head boy, and then he's sitting up playing PlayStation all day and eating all the cheering fruit snacks, and then he living off of their money. No, 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 no. You are not my blood, little boy. I mean, but that's just me. But how do we do this, ladies and gentlemen? Insurance policy. Set up your $1 million insurance. If you can't afford that, set up you two $500,000. If you can't afford that, set you up for $250,000. Whatever kind of way you want to set it up, and you can have as many insurance policies as you want. Just let it make $1 million. Let it total up to $1 million. It's only going to cost you 8 to 10 grand for your funeral arrangement. A lot of that stuff is if they put you in a box or if they burn you up and put you on an urn. I chose to go the urn route. I'm not going to want to be here anymore. I don't care what they put me in. I don't want no whole bunch of people standing over top of me, snotting and crying. No. Death certificate, send them to the crematorium. Just that fast. Now, once your insurance policy is set, talk to your lawyer, and you're going to create that account. It's only going to cost you $100 to open up that bank account or that trust fund. You're going to open up that account, $100, and then it's going to wait. You don't touch that money. You don't bother that money. It's only $100. That's in the event because when you leave this world, that insurance policy has to go somewhere, and it's automatically set up for it to be directly deposited into that trust fund. Now, the lawyer that you've hired, he won't have to do no work until the event of your passing. We're going to have this large gathering. You're going to invite the trustee and the two beneficiaries, and everybody's going to come in and they're going to read the will. Everybody's going to get a set of the instructions. And everybody's going to know that it's not a probate judge in the 50 states that can overturn what I done already put in motion. So here's the thing. Generational wealth. We're talking about generational wealth and being your own bank. I already showed you how you can borrow your own money from your insurance policy. No bank, no penalties. It won't hurt your credit. So we've covered that part about B.Y.O.B, being your own bank. Now we're talking about generational wealth, so you don't lose the money that you have did, all of your hard work and sacrifice. Mm. And that's for generations down the line. And it's still strict instructions through the legacy or through the foundation or through the trust fund. Even when they children have children, it's automatic that they get a $100,000 haircut off the top. But it's to establish the next generation's money. Now just think you did that 3 times. I've done this 3 times. I'm going to use myself for instance. 2 daughters, they each have a child, that each have a child, that each have a child. So that's 3 times 2 is 6, 3 times that's 18, uh, 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 yes, 18 years, 18 children, no, 3 grandchildren down the road. That's 3 generations down the road. Each one has been started with $1 million. Now, do the math. 3 generations plus my daughter, that's 4. 4 times 1.1, that's 4.4 million on each leg, each child. That's 8.8 million just going down the line with 3 generations. Now, the foundation has a working surplus, a working fund, because in the event of the death, each time it's a death, it's going to be $1 million into the fund. Now we're talking generational wealth. This is how you change the dynamics, change the your family's lineage, but it has to start somewhere. And that little $25,000 term life policy, your job is not going to do it. Before long, ladies and gentlemen, what you establish. You know why we keep talking about J.P. Morgan? Because what J.P. Morgan did back in the 1800s for his family, what J.P. Morgan did to his family in the 1800s, we are witnessing what he put into motion back 400 years ago. So you have the power to do that, and he did all of that through insurance, because the insurance money can be taken and buy other businesses. It can be used to buy land. It can be used to buy buildings. It can be used. You can buy an apartment complex through your insurance, and then as the rent money comes back in off of those apartment units, you can be paying your life insurance back, all of that money, and it is not going to affect your credit. Oh, man, I'm giving y'all this work today. I'm plugging y'all in today. If you but listen, now I might not see a million, but my children will, and now I can rest easy knowing that they have a hand up and a better shot. Everybody's children's child is not going to make it to the NBA, the NFL, baseball, hockey, swim team. Everybody's child not going to make it to college, but that doesn't mean that they can't open a business. Mm. Mm. Becoming your own bank, ladies and gentlemen. This is how we do it through the avenues of insurance. And the laws around that insurance policy is so trim. They done trimmed all the fat off. It's been right there the whole time. But what they do, talk not like this. They don't talk about it like this, to where it can change families. And they don't talk about it. They just talk about insurance. Something that's what you need. Just get you enough to do that. They want everybody to take the minimal amount. Now, here's the thing, and this is why I'm not a fan of term life. If you pay that term life payment, what's that? All that money that you don't put in there, come on. Real talk. All that money you put in there, come on. If you ever let that policy lapse, anything that you paid in there, come on. This is why you don't play with it. We have to get into the mindset of making sure that of all things that we don't pay, not your car note, not your house note, you can get all that stuff back. You can't get your death back. You can't get your life back. Once you leave this planet, there's no do over. It is over. So if anything that we make sure that you pay that life insurance. Let me tell y'all something. Fun fact. This is how serious the insurance game is. Did you know that every time you buy a car, purchase a car, or purchase a home, you know that there is an insurance packet, some papers that slip into all of those papers that you sign? Why would the car dealership need to get insurance? Fun fact, ladies and gentlemen, when you buy a car And if you go back and find them papers, all the papers that you signed, there should be a little bit stacked, anywhere from 15 to 20 pages. There is an insurance clause that slipped into your car, your purchase car. Did you know when you buy a house, there is an insurance clause that slipped into your, your purchase of your home? This is how serious the insurance game is, and this is how the insurance game can change your whole entire life. Because in the event that you die, let's just say your car is worth $50,000. Let's just say that, just for a fun fact, $50,000 car. Your insurance clause on that car is probably going to be about 100, maybe 125, maybe 150. You can go in there and read it and find out. So not only the dealership is telling you that that insurance is going to pay the car off, blah, 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 blah. That dealership just made money off of you. And guess what we just did? Scratch that name right there on it. That money don't even come to you and your family. Oh, bottle sauce. That's what this is. When you buy a house, it's an insurance clause that slipped in your house. So now they tell you in the event that if you die, this money is going to pay off your house. But what they don't tell you is that that bank or whoever has the mortgage loan on your house is going to come up. Buy a house, 100,000, 200,000. They're going to put a 500,000 on it. You know why the insurance game is so nice? Your life, ladies and gentlemen, has value. And it's more than that little measly $25,000, $30,000 term life policy that they're trying to cram down your throat. I'm gonna tell you how you'll know that your life has real monetary value. God forbid you lose a finger. Just one finger. Don't let it be the thumb. The thumb is a major. The thumb is a major. The thumb, ladies and gentlemen, is alone $15,000. All the other four, 10. A limb, $25,000. A leg, 50,000. An eye, 10,000. Ooh, just your body parts total up more than $100,000. You know why your job puts insurance on you? Your job, your job puts insurance, and you got some counter that has calculated how much work they can pull out of you in the term of working for them for 20 years. A lot of y'all didn't even know that. Y'all just get health insurance. They got life insurance because they want to make all of the money out of you. And the only way that they can get that money out of you is life insurance. They'll put a life insurance policy on you, already knowing. And then what we do, we go in there and sign them papers blindly. We don't even read them papers. See, we sign our life away, and our family don't get one red standards, ladies and gentlemen. Learn the insurance game. Learn the insurance game, become your own bank, and establish your own generational wealth. This is how you establish generational wealth. It can start with you. I am R.D. Muhammad right here, plugging you in with the information that you need in order to make you successful. In order, setting up the stage for you to become your own bank, ladies and gentlemen. Setting up the stage for you to give your children and your legacy a real shot at opportunity. Just because you were brought up in the process, that don't mean that your children and grandchildren have to be brought up that way too. Somebody has to start it, and it can start with you. I'll see you guys on the other side. Peace.